No, the stock of Booking Holdings did not crash by 96%. It only had a 25-to-1 stock split. In other words, if let's say you had one share of Booking Holdings, today you hold 25 shares, but the price went down by 25 times. The total number of shares of the company itself increased by 25 from 32 million to 800 million. But the fundamentals of the company did not change at all. The size of the company did not change at all. So why are we talking about it if the fundamentals don't matter? And why did the management choose today to do a stock split? If you listen to the CEO, Glenn Fogel, for years, he has been against a stock split.
Now over 3,000, from 6 to 3,000.
remarkable.
That's the way to look at it.
Why haven't you split the stock? Was it 3,000?
Why should we split the stock?
Well,
Tell me
there's
the
two-
positive.
Well, the positive, of course, is that some people think it's too expensive. Small investors
Wait, they think
can't
it's too
buy-
expensive because of
because
of
on the
nominal,
absolute basis,
a nominal amount?
right? Exactly, the nominal amount. And
Because of a nominal, they
right,
think it's too
exactly.
expensive. That's how they
Yeah.
value a stock.
Some
Because of-
people, as you well know,
I
some
don't think
people
I
do
want that kind of investor.
Oh, well, you sound like Warren Buffett.
And I admired his reason because it doesn't make sense. And he wants to be choosy about the owners, the investors in his company. And that's something to admire, that the CEO doesn't want anyone to just come and own the stock. You have to choose your investors, just like Berkshire Hathaway did. That's why he was compared to Warren Buffett. But unfortunately, stock splits do have some effects on the stock itself. In the past, it increased liquidity because the more shares, it makes it more affordable for retail investors, and of course, more retail investors are going to own the stock. It is easier to own a $50 stock than, let's say, a $5,000 stock or a $50,000. That's one of the reasons why also Warren Buffett created the Class B shares for Berkshire Hathaway, to make it more accessible instead of funds trying to charge people in order to own the Class A shares. But this is not really a problem today because there are fractional shares available for most people. I did not do the research myself, but there is a video from that donut guy. There's a video from the Plain Bagel where he talks about it. He made the research himself to show that a share split doesn't really have a long-term positive effect on the stock. By long-term, I mean 1 year. But after 2 years, you don't really consider if the effect is here or not. But I think for Booking Holdings, it has something important. And that's the reason the management gave, that it will help in terms of stock-based compensation. You know, I'm not a fan of stock-based compensation. And when it comes to Booking Holdings, this is a company that brags about having one of the lowest stock-based compensation in the industry, or even among tech companies. But they still do make use of stock-based compensation. And I don't think there is anything wrong with that, as long as you're not trying to deceive investors, as long as you're honest with it, that you're creating more shares. But Booking Holdings also repurchase shares, so the number of shares over the long term has been going down. You can read my full analysis of Booking Holdings on my investment community. You can find all my research, all my analysis there. There are courses, investing for beginners, more things I'm working on. And every YouTube video, you can actually go and see these notes that I'm writing, everything. So please do check it out. There is a free version if you're interested. You have many updates from me. Nevertheless, when a company uses stock-based compensation, Berkshire Hathaway doesn't use it that much, so it's less important. But and also Berkshire Hathaway had the Class B share, so they had both. But for a company like Booking Holdings, let's say you're going to give one share or the option to buy the share to an employee, it's $5,000, $6,000. Right now it fell to $4,000, but still it's a huge amount. When you're dealing with smaller amount, it is easier. And this is the main reason why they gave for the stock split. Another positive effect that the stock split might have is the inclusion of Booking Holdings on some indices. For example, the Dow Jones. It's not something that will happen anytime soon, probably, but it makes it more accessible for such indices that are based on price instead of the size of the company, the capitalization of the shares. Because this is where investing is going. It should be accessible to more and more people. In the past, if you wanted to own one share of any company, it used to be so hard to find a broker, to pay them the big fees in order to own the shares. Now it's easy, it's available to anyone. And of course, this is something we need to celebrate as investors. And that's one of the reasons retail indexing that pushed stock prices in recent years. Even if the fundamentals are not changing that much, yes, it's not going to affect my intrinsic value of the company, but psychologically, it has a little importance. We cannot know for sure if the stock split happen or not happen, what difference it would have made. But I do think that it makes it more accessible for most people, and that's a good thing. There are other things that you need to think about as an investor. It's not just about the intrinsic value itself. It's also about who owns the shares. And Booking Holding is not really the right example. It's a very popular company. Many retail investors own it. There's fractional shares now. But let's say when it comes to dLocal, this is a company that over 40% is owned by insiders. So the liquidity of the shares itself is very low. That's why they chose to pay dividends last year instead of repurchasing shares. But this year they were able to buy back shares because of a secondary issuance that they made from one of their shareholders. It did not cause any dilution, but it created more shares, more float to be repurchased. And sometimes it's even important to just move the stock from where it is traded to another country, like Wise is doing. I think Wise moving to the US will make it more accessible. I talk about all of this in a recent video. I recommend you watch it. Have a nice day and goodbye.